The second quarter starts off with a bullish tone while traders look to the Fed notes later today for clues of potential future quantitative easing. Auto sales numbers will also be a focus in today's action. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with TheStreet, and together we bring you Morning Call Express. So, of course, Scott, stocks started off a little slow yesterday, but they really built as the day went on. So I think the question is right now, where are your thoughts heading into today?
Heading into today, I actually got dragged back into position. It seems like every time I try and take some positions off to try and be a little prudent, after a few days, the market proves that it's in the same upward trend. If you look real quickly at the chart of the S&P, you will see that we're in the same methodical trend. Here's the macro trend line that's been intact. Here is that intermediate trend line that got tested right here. Almost got tested about a week or two ago. We pulled back in, broke the 10-day, held the 20-day. But then if you look at yesterday, we took back the 10-day. We actually went above the recent high. We didn't close strong, but I do think that this trend to the upside is still intact. And people following it, readjusting their position size, are getting rewarded. So
with the Fed's minutes out later today, what do you think traders will be focusing on?
I think traders are going to try and see whether or not they're going to do another QE, what their tone's like, what they think about the economy moving forward, and if they're going to keep rates down or low until 2014, etc. So at this particular point, as long as they don't say anything too drastic, I don't think it's going to be a problem for today's trading.
And in terms of commodities, we saw some rotation into commodities yesterday between the GLD and SLV. I know you're long SLV. So are you focusing on that today?
I did get involved yesterday and I added a little bit. This is a kind of like a concept play. A lot of people think gold and silver are going to be higher in the second half of the year. So if you look for a pattern to see it develop, you can get good prices. So if you look right here at the SLV, you will see that here is this inverted head and shoulders pattern that I started talking about a week ago. Here's your left shoulder, your head, and then here's your right shoulder. You have to have a little bit of vision. So for me, I'm in silver, first time in the last few weeks. You could be long versus this 30 level. Yesterday, you did see it pop above this intermediate trend line. Not very powerful yet, and I'm not expecting a lot of power. So I'm in about tier 1.5, micro-wise, as long as it stays above 31.45, it looks good. But on a macro level, this 30 level should be your stop. And at this point, if we start taking back these moving averages, it could start moving better. And GLD is very similar. If you want to be long gold, be in tier 1, and then if it starts to break that intermediate downtrend, I believe at 165 in the GLD, we could start getting some momentum.
Well, you've also talked about IPOs that have issued secondaries, so why the focus on these?
Because these are where the futures winners come from, and everyone says you can't be a stock picker, but every year or two you find a stock on the move making historic highs. We've talked about MasterCard and IPO in the last few years at the highs. Under Armour, Visa, you name it, usually the best of breed come public and you have to find the good ones. And I do think that Coors just had a secondary, looks good, something you could stay with. If you look right here, had a big move from the IPO. It's holding 44. I think if it holds 44 short term, you stay with it. I think it has higher prices. I've talked about Dunkin' Donuts. Okay, this has been a decent trader. If you look right here, you'll see it did a new issue around, or a secondary around 29.50. It held it, so you could be long short-term versus 29.50, and at some point this year, it takes out the highs. And I also think Zynga, if you want to be long, it could be long versus the secondary price of around 12. So all three of them could be short-term trades, and also if you put them in the draw and you're looking for long-term positions, these three should be on your radar.
What about the banks? They started off slow. We saw them regroup as usual.
Well, yesterday you want to see signs that we were going to continue positive. So Apple took off right out of the gate, so that was great. And then the banks were a little slower, but then they also joined the rally. So if you look real quickly at JP Morgan, you'll see same trend as usual, holding the 10-day. If it starts getting above 46.50, I think that's good. As far as like a switching gears, Bank of America, I talked about it yesterday with Chow. I said, as long as it holds this lower end of the range, I think you could buy the dip, and that was right around 940. Now it'll be interesting to see if it takes out this 10 area, and if it does so, you're going to see some continued strength there as well.
All right, well, we're going to dive into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. fill in your name and email address, and I'll see you on the other side.